Hello, everyone. Welcome to another edition of Tip Tuesday. Jeffrey Nance here with you once again. It is now November 1st. So we have finished up with our series on scary things. And now we're going to move into a couple of different other issues. And that's, good just to keep making progress and covering different topics. And so that's what we're going to do. And so today's topic is probably one that will certainly interest some people on here. Now, for others, you might feel like, it doesn't really apply to me. I'm going in a lot bigger than that. But we're going to talk about whether or not we can actually make money with a small amount of money. So, what if you only had, say, $300 to start with? Could you actually make any money trading only $300? So I'm going to break this down into really two types of scenarios. All right. So the first scenario is that you have, pretty much just a basic education. So, you don't really understand how to trade options or any other advanced strategies. And then we're going to look at what would it change if you did have the money and education, so you knew how to trade options. And then particularly the thing I would focus on obviously would be debit spreads, where you have the potential for great return on investments with small amounts of money. Now, obviously, you can do it with larger amounts of money, and your ROI would be the same. So let's kind of break this down into those two components. So let's just say I'm starting out. I have no real education at all, but I've been to maybe, let's just say you went to maybe like a trade surge event, or you went to maybe a step one with Tradeway or something like that. And so that's kind of the extent of your education. So you know a little bit about how things work. You can kind of identify some patterns, but as a whole, you don't have a lot of strategies available in your tool belt, as we say. So basically, what you're going to have to then decide is what kind of stocks do I trade. So again, we're going to work under the assumption here that you do have some charting software, and you're using that effectively to at least recognize when stocks are at good buy points. So for us, in this scenario, we are limited to just stocks that are going to go up. So the next real question is, so once we've identified what is market tone, is this individual stock at a good buy point? The biggest thing to recognize after that is, yes, we want to expand our money. We want to obviously make money. We want to see that $300 grow. But one of the biggest things that I need to focus on with a small amount of money is losing a small amount of money. So the real key here for us is not only simply identifying buy points, getting market tone right and all that, but really committing to a stop out. And that stop out needs to be small, because when you're dealing with a small amount of money, you can't afford a big expense. It makes it that much harder to climb out of that hole. So we have to be really committed to small expenses. Now, how do you get to a place where you can have a small expense and still win big? All boils down to buy points. So the better your buy point is, the closer you are to support, the easier it is to identify a clear stop out, but also to give yourself the potential to actually make some real money on that. So those are some of our first basic keys. Now, what's the next real practical step at this point? So I can go one of two ways with this. So do I want to trade a stock that's like $30, but then I can only get 10 shares? Or do I want to trade a stock that's like $3, but I can get 100 shares? So there are obvious pros and cons to both of these setups. Now, do you want to go get 3 shares of $100 stock? I guess that's another option as well. Where we could, think through that too. But let's just say, $100 stock. We'll assume, that all these move 10%, just to kind of give us an idea of what this would look like. So if I go out there and I buy 3 shares of $100 stock, it moves $10. Then I'm going to make $3 a share, or $10 a share on 3 stocks. So I'm going to make 30 bucks. So if I go out there, I buy $100 stock, I can only afford 3 of them. That's my $300. So I go buy 3 of them. The stock moves up 10%. I make 30 bucks. All right. So what if I get a $30 stock? I can buy 10 of those. Okay. And it goes up 10%. All right. So then I got 10 of them times 3. I make 30 bucks. All right. Well, what if I go get a $3 stock? I can buy 100 of those and it goes up 10%, 30 cents. I make 30 bucks. Okay. So it doesn't necessarily matter. Okay. If you get a similar 10% type of move. Now, obviously, if you're looking at your pattern and you're saying, well, this $100 stock is probably only going to move about $3. That's not a good investment for you with a small amount of money to say, I can only get 3 of these, because then when it moves up $3, you're going to make like $9. Okay. You look at that $30 stock and say, well, you know what? It's going to move up about $2. Okay. Well, that's, that could yield you about 20 bucks. That's probably a decent investment for you. You look at that $3 stock and say, well, really it's been moving about $1. So you look at that and you go, wait a second, $1, but I can get 100 of them. Well, the best investment for me then is to go get 100 shares of the $3 stock. That's the one that's most likely, based on its pattern, to yield the highest amount of money into my account. And ultimately, guys, that's what we're trying to do. So we would look at that and say, in those scenarios, I got a $100 stock that looks like in its pattern is only going to move about, let's say $5. I got a $30 stock that looks like it's going to move about 2. And then I've got a $3 stock that looks like it's going to move 1. Well, then we can do the math there and kind of say the best investment for me is ABC. And obviously, with a smaller account, that's something that you will need to consider, is based on the pattern and the likelihood of the movement, which one of these affords me the highest potential profit. Now, we got to always throw that word in there, because we don't really know whether or not it's going to complete the whole pattern or not. And we don't know whether or not we might get stopped out. So we do have to base it on the things that we've learned, the patterns is it predictable, repeatable, and reliable? Is it working? Am I aligned with market tone? So all those things are going to come into play. But when it comes to actually choosing and narrowing down, let's say 3 to 5 stocks, we do have to consider the movement and also our buy point. So where's my buy point? And if it breaks through support, where would I stop out to lose the least amount of money possible? That's also going to be another factor, because you might look at a stock and go, well, it can move X amount, but my buy point is really late. And so if I stop out, I'm going to be stopping out like way down here. So I'm going to be taking a bit more of an expense if I enter this trade, even though it may have higher profit potential. But man, if it goes the opposite way, my stop out is going to be greater. That might be something that you also need to consider. So there are some factors that are going to come into play here if you're just simply trading stock. So if you're just sitting there saying, I'm going to buy the stock, I'm going to try to ride it from support to resistance. Remember, at this stage, all we're doing is buying stock, and so it's got to be directional. So it's got to go up. We can't really do anything with down trades with our $300 account. So we're buying stock, we're moving up. Now let's look at the second scenario here. What if I'm trading with a small amount, but it's just really me just kind of trying to test the waters a little bit. So I went ahead, I paid for the education. I've gone through the courses. I understand how to trade options. I understand how to do debit spreads. What can I do with a small amount of money? Well, this is something I actually really encourage people to do regardless of the size of their account. I call this proportional trading. So if you said to me, Jeffrey, I want to get to a place where I'm making 10, 20, 30 plus $1,000 a month, how do I do that? What I would say to you is, well, let's see if you can make $100 a month first, right? Because if you're unable to make $100 a month, why do you think that you have the ability to make 1,000 or 10,000? Why do you think you have the ability to make 2,000 or 20,000, 3,000, 30,000, etc.? So if we can't take a small amount and then prove that we can adequately do this system with a small amount of money, it doesn't make sense then to assume that we could go out there and do it with a large amount of money. In fact, what's likely to happen is you might have a larger amount of money, but then you're going to have more expenses. And then you're going to look up and just be like, wow, that didn't really work out well for me. I ended up with more expenses and a deeper hole. So that's not really something I'm interested in doing. The benefit of options is that you can leverage your money. So you can go out there and say there's a $30 stock. Well, you might be able to go out there and buy an option for $3. So rather than just getting 10 shares, you're now in control of 100 shares. So options provide extreme leverage. And then when it comes to debit spreads in particular, you might be looking at returns on investment of 100, maybe 200, maybe 300%. So you could quite literally go out there, all right, depending on how you execute this trade, put $100 into a trade with a potential to make $100 on that trade. There are plenty of trades out there where you could put $100 into the trade and maybe make $200 or even $300 on that trade. So obviously debit spreads carry great profit potential. Yes, it does come down to execution. Buy points still matter. Obviously pattern still matters, but directionally we can go both up and down. Same thing with options. I can make money if the stock goes up. I can make money if the stock goes down. So it does provide me more opportunities, more flexibility there if I can trade options or if I can trade spreads. So doing so allows you to put in a smaller amount of money, really test your ability to see if you're getting the patterns right. Are you stopping out when you're supposed to? But the opportunity to make money quicker obviously increases. So let's just go back to do some of our math. I got a $30 stock. I think we were saying it was going to move about $2. So with an option, rather than basically just buying the stock. So I got 10 shares and made 20 bucks, $2 a share on $10 or on 100 or 300 bucks. Now I'm able to go out there and say, all right, this $30 stock, I can get a $3 option. So that means I can get 100 shares essentially. And so when it makes that same $2 move, I'm not going to make penny for penny, but I'm still going to make at least $1 a share. So now what ended up happening on that same $2 move, rather than making $2 a share, I only made $1 a share, but I made $1 a share on 100, not 10. Well, that changes the scenario significantly. If you can make $100 on the same move where you would make $20 just simply buying the stock, that in and of itself is huge leverage. I mean, that really puts things in a better place for you, because essentially you have the same amount of money at risk, but your profit potential has increased substantially. And that's the power of leverage. And then obviously a debit spread is leveraging your leverage, because now you're actually getting a discount on the option. So it involves multiple legs. You'll be both buying and selling at the same time. It is a bit complex. Now we break all this down and show you how to do it. We show you how to look for the right numbers and prices and all that stuff. So if you're interested in that, definitely check in with us and check out our different educational levels so you can get access to that. But absolutely, can you trade with a small amount of money and make money? In fact, not only can you, I would encourage you to try that, to start out that way. Because again, if you aren't making a small amount of money with a small amount of money, then it may be difficult for you to make a large amount of money with a large amount of money, right? So if we can proportionally trade, let's just say I'm trading with a small account, but then I raise that account from 300 to 400 to 500 to 600. Well, now I can increase the number of contracts that I'm buying. I can keep things proportional, but getting one contract, maybe I'm getting two. And then if I continue to have the same success, maybe I'm trading three. And then maybe it goes to 5, and then maybe you get to 10, and then maybe you get to 20 and 30 and 50 and 100. And then you look up and you say, wow, instead of making $100 a trade, I'm making $10,000 a trade or something like that. I mean, it could happen with 100 contracts. that's essentially 10,000 shares. So if you got $1 move, you'd be making 10,000 bucks on that move. So it's not out of the question, but what I would really encourage you guys to do is be excited about the potential, but also don't lose sight of the importance of trading small and realizing that I need to be able to trade proportionally and to not get frustrated with trading a small amount. I mean, when you're having wins, rejoice, be excited about that. Don't think about how much you could have made with 100 shares. I mean, it's fine if you want to do that for kind of like, positive reasons, but don't do it from a negative perspective. Like, oh, I should have put more money in this trade. Realize that you're doing this. You're going through the process for a purpose. And ultimately, if you can do this over the long haul, then you'll have plenty of opportunities, right? As long as you're alive and the market's still going, to be able to make larger amounts of money over time. So can you make money with a small amount of money? You certainly can. Do you have options on how you can do it? You certainly do. So we want you guys to kind of see where you are financially. What kind of steps do you want to take? What education level are you pursuing? What makes sense to you at this time? And then understand that when you get more education, you are providing yourself with more leverage, which gives you more opportunities. Thanks for being here again for Tip Tuesday. We'll see you guys next time.